Like, this rocket launcher is so easy that a child could operate it. And to me, that's a great selling point, you know? It's awesome.
Oh, this is a fucked up world.
Yeah, it's dark, man. It's dark.
We need more plastic landmines.
What was that?
We need more plastic landmines.
What was it? Did you have you ever heard of Laos?
Yeah, Laos, Cambodia, and most landmines. They're still fucking
most bombed country in the world and wasn't even in a war.
It was the Ho Chi Minh Trail, though, and it was a major supply route for the Viet Cong. So they bombed the shit out of it, mate.
It was something crazy. I read something. It was like thousands of bombs every 9 minutes for years. That's what it equated to, like the amount of bombs, and like they pretty much started building buildings out of missile shells.
Yeah, they altered the landscape with the amount of bombs they dropped. It's like fucking all the mountains. If you look at them today, they're all like sharp and jagged where they've just been blown to shit.
Really?
Yeah,
I found this out.
There's a documentary, like I think it's a Swedish company who were doing a lot of the fucking like blowing up the bombs and that, you know what I mean? But it was an interesting documentary, like.
Yeah, there's a lot. Like I'm looking at a project there at the moment, solar project, and my operations guy came back with like the risk evaluation of this project, and like the first thing on this list is like mines. We need to use a mine team to like go explore and predetermine.
Yeah, it's a logistical nightmare, mate. Absolute logistical nightmare. I wouldn't even fucking touch it.
I kind of want to touch it.
You just end up with lawsuits, mate, or people coming home with fucking legs gone and all that.
But someone needs to do something in these areas, so yeah, it may as well be me.
As long as it's in the risk assessment, bro.
Yeah, I've taken care. It's interesting, like I was reading today as well. There's a have you heard of the BRICS Bank? Has anyone been keeping track of this BRICS? That's a no. But this BRICS Bank is the ex-prime minister of Brazil is now serving as the head of it, and they're going to start financing projects that the World Bank and IMF doesn't, which means all of these countries that kind of sit on these gray lists, black lists, sanction lists by the US will finally get access to like development countries. So they're basically forming their own development bank now, which shows that this IMF wasn't a sort of global alliance, and there is I guess, a tear in the fabric of the system, which was very, very interesting.
Funding terrorist, is that?
Sorry?
Funding terrorist. The
terrorist.
BRICS Bank.
One man's terrorist is another man's martyr. That's what they say. I'm going to have to censor that. Look, it purely comes down to perspective. I think if you're on one side of the wall and you're getting bombs thrown at you and you're a civilian like in Iraq who's had your country invaded over things that didn't exist.
Like over like fairy tales, yeah.
Over fairy tales, and like no one on that plane was Iraqi. So I think there is some perspective there that there might be some hatred from the community in the world. So perspective.
Well, in the West here, we don't have any martyrs. That's the thing, isn't it? So I know what you're saying is one man's freedom fighter, but we don't have actively send British over to like bomb schools and shit like that.
No,
we just send warplanes.
All right,
yeah,
I think firstly say like detach yourself from the country, because you're not implicated in any of this. So the UK.
No, that's the thing. Like we do horrible things, but when I say we, it's the government. It's a political thing. It shouldn't be took out on civilians. But you know, I can't choose what these organizations do.
Which is why I think like it's important, even when you're talking about like it's not a we statement. You want to separate yourself from government. That's the idea of sovereignty, and everything right now is like been pushing towards this centralized government where you do look for them to make all your decisions like a nanny state. So that's why I think even like words are powerful. Just detach yourself from the country because you are more than your country.
If I may interject,
This
just
is
on
why I
some
want the monarch.
statistics.
Bring the monarch back. Get rid of the government.
Yeah, the
Dangerous
monarch would
game.
be good. So the number of United States troops who have died fighting wars in Iraq and Afghanistan has passed 7,000 at the end of 2019. Okay, now let's look at the reverse. There have been approximately 280,000 to 350,000 Iraqi civilians alone killed in direct violence since the US invasion in Iraq alone. And of the Americans that killed themselves, 30,000 of them commit suicide after coming back. So, I mean, like, they're not done once they're finished in Iraq. They come back home and also fucking proceed to do something about it. But I mean, look, how can you look at those statistics and then just anyone could be on any side of the fence besides the poor Iraqis, you know, in that it would be insane. Oh yeah, but you know, weapons of mass destruction. Oh, you know, the Iraqi regime was incredibly violent towards its own populace and stuff. Well, what's the statistics say about how the US forces were in Afghan as well? I mean, after departing, we did a meeting with, I mean, I can't say this. Well, let's say with a party from Afghanistan, and you should hear what some of their retorts are to the Americans. They've got some good things to say, like some real gotchas, you know, like, oh, how can you say this when you did this, you know? So it is hilarious. You
I
know,
think we all agree Iraq is one of the biggest embarrassments of the US to date. It was a fucking show.
No, that's not an
power.
embarrassment. Like, I think Vietnam was probably the biggest embarrassment because you've gone into a country for no reason, firstly,
what
and
was
then been taken out by people with effectively like bow and arrows and spears.
Yeah, listen to this. The official kill ratio for every American killed, 40 Vietnamese were killed.
Fucking hell.
Yeah, and bear in mind, a lot of those officers and stuff would have stayed in the barracks and stuff. Think about the guys dropping napalm. What sort of counts they had? Phenomenally high. Phenomenally high. And you know what's crazy as well with Vietnam? I think it was like, if you had done one tour of Vietnam, you were like 78% likely to go up to 3 tours because guys would go back. You know, they would
like
go
they're
back.
just bloodthirsty. Is that what you're suggesting?
Well, one of two things. One is obviously, and I mean, I think 20% of all officers' deaths in Vietnam were patricide. Yeah, so the what do you call them? The grunts or the infantry or whatever were killing their own officers as well. And I mean, like, think about it like this. I mean, now you're in Vietnam and you've got the hippies protesting the war, and then you go back to the States and it's not how you remember it, you know? Now everyone's spitting on your face. Of course, you're just going to go back, shoot some heroin. Well, smoking heroin is what they would do. Smoke some heroin, smoke some doobies, listen to Jimi Hendrix and shoot some gooks, man. That's basically what they were up to. Like, I'm saying that from the perspective of an American, obviously. I have nothing to say. Vietnamese flow is very good.
I'm watching fucking Clint Eastwood film.
Yeah, so 40-1, man, 40-1. But America are the world police. We need them. Without them, this whole place would be. Look at Dubai. Without America, what would this country be? Well, this city, I should say.
Well, look, this place has just been very, very strategic with everything they've done. Like, they're very good at playing both sides.
Has America not been involved in Dubai's development, though? I thought that was a thing.
What, the US?
Yeah, I thought there was a close connection between the two.
Like, we've had a US base
especially
here
with the currency back in the dollar, isn't it?
Yeah. Like, the US is very involved here. They've had a base here like probably since before I was born.
They dock their ships here often, and that's like a big sticking point for why they're considered like strategic allies, that they're willing to drop the carriers here from time to time, you know?
Yeah, this was what I think that was one of the points you made on a call before, wasn't it? In regards to, I'm not going to say anything. I'm not going to say it.
That one, don't say anything. Don't say anything. Yeah, that was not recorded. Yeah,
so that one wasn't recorded.
Yeah.
So everyone can just remember.
That's very, very interesting. It's very, very, very interesting. I wonder where we'll go next with America, you know, on our trailblazing trot around the globe.
Well, look, I think this is the end. I think I've just been rereading Ray Dalio's books over like the last few weeks. Has anyone read those?
No. No, I don't know how to read, but yeah.
All right. Actually, there's something that he did some animations like a few years ago. They're on YouTube. They're like 30-minute synopses of his books. And essentially he goes into what actually causes market cycles, how the cycles occur. He's got loads of data and facts, and like a bit about Ray Dalio is like a very successful, probably I think he's one of the most successful hedge fund managers in the world. But he had like a very public embarrassment where he was essentially calling the death of the financial system years ago, decades ago. Not even in like 2007. I think it was in like the 1980s or 1970s. He was calling for it, and it wasn't the time. So essentially what he, I'll send the link in the group for everyone. I'll put it in the description of the video as well. But essentially it's kind of like I guess a horizontal S shape to these cycles, and you've got a multiple of these micro S shapes within a larger S shape, and we're now on the descent of this larger one. And what he goes into the detail as well is like the timing between different reserve currencies and the collapse and what triggered them as well. So what triggered between the transition between the GBP pound as the reserve currency to the US dollar. What was the Dutch currency before? It wasn't a franc. But the Dutch were before the British. So what triggered that? And the guilder, yeah. So going into all of those details of what was happening within the falling major reserve currency and that neighboring country who was on his way up on the economic chain. So essentially, I think it's very relevant now. So I'll share the link and everyone can watch it. But you can look at this graph and you will see like you could feel where we are based on all of the calls and all the knowledge everyone has right now, and seeing all the patterns. If we look at 2007, which is our last financial crisis, and I was talking to Nick earlier, it was the last time that the money supply went negative as well. And that's only happened 5 times before. So this is now the 6th time. There wasn't China in the picture. There was no talk of China. In the 80s, you had talk of Russia. So there was a bit more of a chance and opportunity for a transition there to a ruble. But now we're seeing this alliance of a BRICS where we're not seeing a rise of a single dominant power. Well, we have a dominant power in the likes of China, but it's united with several other major economical powers with this BRICS nation. So that's why I think this BRICS Bank is very, very important, because they're essentially creating a secondary system to what exists right now. So building out that multipolar world, and with Brazil's just obviously I think is one of the second, is it the 3rd biggest economy after US and China? But these guys have just opened a Renminbi clearinghouse, so they can start receiving yuan for their exported goods. China's their biggest exporter and importer of all Brazilian goods. America is literally, I think I've got some facts on this which I'll share in the group as well, but the US sits probably, I think China's 3x what the US contributes to Brazil. So you can see why there's this transition and moving, and now Mexico's on board. Honduras has kind of shunned away Taiwan, or denounced Taiwan as an independent country. So you are getting this major separation, and there's a lot of countries around the US that are going that direction. So it's de-dollarization is very much here, and this is where I think we're entering into this is the depression.
A point to add is, if you look at global vehicle production from 2008, you look at countries like, Southern American countries packed with Chinese and Japanese, also Africa, as we know. Chinese were responsible for 13 or something like that, 13% of vehicles manufactured in 2008. And now in 2021, it's like 35%, So there will be one of the majority vehicle manufacturers on the planet soon. And that's a big deal in terms of export import, especially with chip shortage, et cetera, et cetera.
But they're also willing to invest in like all of these countries that they're collaborating with. So as part of like this deal with Brazil, they've essentially said they'll create a BYD factory there, so for battery manufacturing. They're contributing about 30 billion into infrastructure projects. So from that perspective, this isn't like what the US would do, where they would create these partnerships with, in quotation marks, with these emerging market countries, but then say like, you can't export any goods, it has to come through us essentially. So using that capitalistic approach, whereas this is more in alliance, I would say there's more contributive. It's not the unsustainable debt financing models that China was using before.
Should I take my money out the bank then?
I would. Well, I think last week's figures were 30 billion US dollars was removed from banks.
Yeah.
So like if people are moving that much money out of US banks, no one it's not even in the news how much is being removed, but there's a huge liquidity shortfall. So I think I posted as an emergency meeting tomorrow, a closed door meeting, but I think out of that, they're essentially going to increase the FDIC insurance to, there's no way they can calculate what the shortfall is. They will have to be effectively infinity. So the money printer will go on.
Should I be buying then like tangible goods such as Pokemon cards, baseball caps, and collectible fridge magnets, like, you know?
Well, under a
Rolex?
typical monetary policy system, yeah, like you're leaving the dollar because there's less value in it and you're moving to assets essentially. But depending on how much, I would say, excess capital is in the market, and which I don't say there is any. If you look at the size of credit, there's no retail capital in the market. So it's a difficult one to say. I'm entering, like I have been, when I've been telling people to do, is enter the markets. Like you're still getting more than a 50% discount from tops, in some places 80%, depending on the stock, especially like these high growth stocks that had huge all-time highs. So from that perspective, like they're huge buying opportunities anyway. But if you're looking at alternative investments like that, no, not my kind of cup of tea.
My suggestion, as soon as you have the opportunity to purchase yourself a property that you will one day live in, would be to consider doing that. Just, that's my, like, from what I have heard, that's something that is kind of preordained here, you know? As you knew anyway,
We touched on this one on the last call actually, and it was how much I think it was Lloyd's out of the UK essentially has a goal to become the UK's biggest landlord by 2030.
Yeah, it's very along the lines. Yes,
you've got Lloyd's out of the UK, you've got BlackRock. I think BlackRock's, I can't even remember the number that they put down, but it's billions on properties under $500,000. So
they purchased 22% of all home sales last year were to BlackRock in the States. So that's a tremendous figure.
That's a tremendous figure, and considering they're also under $500,000, there's a target market there as well.
Yeah,
huge target market.
Yeah.
So look, I think we're moving to this kind of long-term, like life as a service. Everything's been moving to an as a service model, and this has just been, I guess, a inevitable. Business models just converging across every system. But I guess life does make sense to an extent, but I think I'd like to be in control of my life for the duration I have it.
If I want to burn my house down for fun, yeah, because I thought I'd try and like microwave, like get drunk and microwave like 9mm rounds or something, like allow me to do.
Why is it always so dark?
Like what to do? It's not dark, but like, you know, it's pretty fun. I'd be curious to see what would happen, you know. I don't think they'd go off. But like if I want to do that, I should be allowed to do that. You know, if I want to own firearms, I should be allowed to do that. And if I want to shoot heroin in my house, I should be allowed to do that on my own property. And I should be allowed to kill trespassers and things like that, you know, because that's just how I was raised. Yeah. The
For those that don't
move,
know, Liam was raised in South Africa.
yes, I was. Yes, yes.
And then
Yes,
LA, which is equally as dangerous.
I have a sporting license, which means I can own an AR-15, which I don't. But it would be good. As if I moved back there, I would 100%. I don't know what I do. Where do you hide it? You know, where do you put it away? That's something everyone wants to play with. Yeah, look, I mean, that's the nice thing about these sorts of wilder kind of countries, you know, because you can do things like that. But you know, in your European, I know how long it takes for your town councils to decide anything, you know, and it is all completely controlled, unnecessary bureaucracy. It's nuts. It's absolutely, like, I make my living on bureaucracy, yeah, and it's absolutely nuts. Some of the things that they spend taxpayer money to discuss, absolutely insane. Like the wording of certain statements, the wording of interventions. We don't like that there's a full stop there. We feel it should be a comma, and that'll be a good 45-minute discussion where it has to be unanimous, but Fiji's absent, you know, like, like and by the way, my name, it says Liam H, but my name is Aaron Astley, and I'm not
You just doxed me.
yeah, you know, we swapped names for the day, you know.
You just doxed me. Oh, you bumbuckler.
I'm actually wondering, Aaron, how much of this can actually be posted online.
I actually don't
you
give a fuck.
I'm like thinking to myself, you know, where do I weigh in here? Is this gone you know,
A step
away
too
from
far.
the conversation of price action in the markets the last week? I mean, I'm waiting for my turn, my round, but I don't know if I'm going to go that deep yet.
Sorry, sorry, Nick. It's just, you know, it's been a long time, and I had separation anxiety, you know.
You got no 9mm bullet stories, Nick.
This
Yeah,
is just
yeah.
Liam's time to vent, so let's just get this out the way. It's been a while.
Yeah, I'm kind of scarce when it comes to those stories, unfortunately.
Not enough exposure.
No, that's
Don't
correct.
worry. Liam will take you into Cape Town, the dark ends of Cape Town.
Yeah, if you like, if you like.
You'd never think you're from South Africa, would you?
Say again?
I said you'd never think you're from South Africa.
Why do I, you know? Yeah, it's because I'm not talking like this, guys. Hey, yes, okay. Yeah, you know, where I live in Durban, it's on a hill. I can just literally fire rounds out down the hill, and no one will come. No one will come. You know, like, it's true as well. You know, but you know, my last name is very, very English, yeah, which I shan't say. My last name is very English, and that's because I am probably English by blood, yeah. I'm not a Van der Walt or a Vanderbilt, and like, I mean, I'm 5'6", 5'7" is what I tell the girls. I'm 5'7", and not 6'3" hunk of meat. So it's a different type of South African, I suppose.
5'7" in heels.
5'8" in heels, I'll have you know. 3 inches as well.
Heels.
Oh, geez. Should we talk some charts and numbers?
Yeah. I'm going to mute myself.
Oh, he's so trigger happy. Why is he so trigger happy or everything?
Will this be uploaded tonight, Adam? I'm going to have to shoot now. I've just got a few errands to run.
What was that?
Will this be uploaded tonight, the video?
Yeah.
I'm
just gonna do it raw.
The only thing I would ask maybe is that you remove the first 10 minutes, just because I did name drop and then proceed to talk about stuff I probably shouldn't have. But I'll WhatsApp you that, not WhatsApp, Telegram you that the specific statement I say. Yeah, I mean, look, basically I'm going to report this as soon as it makes it onto YouTube and just hopefully get it taken down, you know?
Oh, you actually can't go on any call. You're not safe for work. What do we want to start with? Let's talk about the Fed balance sheet, by the way. There's a lot of money being printed. while we're increasing rates. Let me pull up a screen. Give me a second. Okay, this is huge. Let me just pull this into another screen. If we look, we started quantitative tightening in, was it May of last year? May of last year. Was it May of this year? We're not in this year. May of last year. We pulled down quite significantly, but all of this in the last few weeks, we've unwound almost 50% of the work that the quantitative tightening's been doing. That's a hell of a lot of printing. So this is where I think the markets are reacting, because they're seeing this, that there's essentially easing in the market. And even when they're looking at what projected rates are, a lot of the bond markets are kind of saying that there's not going to be any rate increases. And there might even be a rate cut by June. And if we're going down that route, essentially we start the money printer on. And I think the only way this is going to happen is if we have this liquidity shortfall, which seems to be more and more apparent. All banking stocks were down, major ones as well. UBS was down, who's making the acquisition of Credit Suisse. I think they were down about, was it 35%? Nick, did you look into the banking stocks at all?
In terms of sell-offs, or in what context?
Sell-offs.
Regional and top level. I think we saw that, when some of the regionals were recovering, we saw assets, more speculative assets, take a little bit of a backseat, I think, as funds were getting shored up. I think we saw that on Thursday. There was a huge riot in bank stocks and the regional stocks as well, which was interesting. But I don't think we can call this. I know there's so many accounts on FinTwit that are posting saying this is a new start of QE again. I don't really buy it personally. I think it's just a temporary fix for the access to liquidity just isn't there at the moment. I just think it's a temporary fix and a way to kind of ease off the pressure and burden that there is on banks currently. And I think they will still try and tighten somewhat. To what extent, I don't know. I mean, they've pretty much just cut half a hole in all of their tightening efforts over the last year within a week, which kind of really just shows the mentality of the Fed and the current state that the US and almost whole Western economy is in at the moment, which is it just can't get out of the mindset of just consistently borrowing huge amounts of money in the short term. There's no real clear effort to really decrease the size of this balance sheet to by any large extent, right? And will we see a rate cut in June? I don't know. I think it's not necessarily the rate rises that are causing pain with the banks. It's actually the consistency of high rates that is causing the pain and pressure. And I still think, if you cut to like 4%, for example, or whatever the new Fed funds rate may be, I don't think it's going to have that much of an impact on banks. There's still a huge financial burden on them. And like we've seen with Schwab as well. Last year they predicted the Fed would raise total rates by 0.75%. They've gone up by 600% rates last year. There's just a huge amount of institutions that just haven't priced this in, and it's very, very worrying. I know it's doom and gloom, but yeah, it's certainly something I'm thinking about.
You don't sound too pessimistic about all of this. You think they're still in control?
Yeah, not so much.
Like, I just kind of see this as a balancing act. Like, when I look at this is all I see as a balancing act. Like, you're just going to have to you're going to overshoot one way, have to pull back another way, and you're probably going to get a few of these kinds of bounces between. It's like with any chart, if you've got a major, like they did a huge, just a massive rate, the rate at which they increased the rates was so quick. You need to have some sort of pullback to ease off. So I could see that, but I guess where I'm very pessimistic towards this, and where this is heading is more, I don't know if I'm pessimistic isn't the word, because I'm going to make a shit ton of money out of this, but it's how much of the shortfall exists and how much they have to underpin it by. And if they need to underpin it by more than all of this tightening that they've done to date, and they're plus more, so you're basically going from what we had in terms of money supply in the pandemic and increasing it further than that. And that's where I think a lot of the markets seeing it. And but once again, the bonds and the credit is everything. So the bond markets are telling a story that they're expecting more, I guess, short-term pullbacks or more easing into the market. But I don't know, like a full flip won't be there, but I think there will be some rate cuts, and just to kind of balance it out and test the waters. They're still going for a soft landing, but the inevitability of this.
Yeah, I think it may help balance it out, but I even look at it on a leverage perspective. Even like pre-pandemic, rates were still super low, right? They weren't at the same rate that they are now, and access to borrowing was, much easier. Even if the Fed funds rate pulls back to 4%, that's still, compared to in the last 5 years, very, very high cost borrowing, and then therefore actually pushing up speculative asset prices with the leveraging that funds will do, and investors and all the rest of it. I just think it is a very, very different market. I think it's very early to just call it a new bout of QE and this is the new bull run. I just think it's like, even from like a real top line perspective, when it comes to degens as well, in the last 3 years, they've somewhat just been completely spoiled with, just asset prices only going one way. Apart from obviously, 2022, where there's a, 20% sell-off, right, on the indexes, but yeah, somewhat spoiled. And I think this market is moving into reality, really. And I don't even think we've seen like anywhere near the pain that we're going to go through, or that the market's going to go through within the next sort of year or 2 years. Silicon Valley and FRC, and they're just the start. It's going to be a domino effect. It will happen, and the Fed's trying to pretty much put a band-aid on a cut off limb, essentially, is how I see it.
Yeah, I think so as well. Like, and even looking at the Dixie right now, it pulled back nicely on the daily from the resistance at 102, which we spoke about last time. So I do think there's more strength in the dollar to come, based off the charts as well. This was if we go on a much higher time frame on the weekly, this was just a nice pullback. Do we double bottom here on the weekly before coming up? I can see we've got a weekly close today, so if we can close trend, we've got a nice upward trend there on the weekly. Yeah. So more weekly Dixie growth on the long term.
Look, those technicals were, you weigh up the dollar at 105 pre this banking crisis, and you're going to be looking more bullish at 105. It's, you can't really price that into technicals, right? And let's see, because I don't expect that. I mean, who knows? Don't fight the Fed, but I wouldn't expect the Fed to borrow huge amounts more. I may be completely wrong. It depends if there's another short-term crisis like we've just seen. But if that isn't to be the case, and they carry on trying to push forward with QT, then I think we can see dollar push up. I actually think it can push off into highs, if I'm honest, in the midterm. But it's all dependent on the Fed. It's just completely dependent on the Fed. But it's interesting.
The conflict, though, there is a struggle in what they've got to manage, and I think if we look at the rollout of a CBDC, they need to tighten up their banking infrastructure and consolidate all of those regional banks under larger banks, which we said last time. But then you're going to have a public uproar if you're letting these regional banks go down, because you're essentially centralizing all of that power. So I've seen a lot of debates right now about whether the US has kind of leaned towards this, where they only bail out big banks. And they're the ones that will essentially then restructure the debt to buy out the smaller banks.
Yes.
It's a difficult one. This is a concerning time, I would say. But yeah, like dollar strength looks still there, powerful, still very bullish. In which case, like S&P. Do you trade S&P? Who's traded?
Yeah, well, I track ES Mini, so we're on June futures at the moment. It's probably the best one to track.
What's the ticker?
Opposed to cash. I don't know on TradingView. ES. Yeah, there you go. Top CME futures.
That's just
Yeah, okay.
consolidating.
Yeah. That's not tracking the June contract, but yeah, we can look at that one.
So if we look on the
Yeah, like
weekly,
that 4200 level. I know I was mentioning like the 4220 level. That was more so on the March contract, but that was almost the equivalent of 4800 in sort of December 21. You know, it was due a large pullback. I think we can even pull off into sort of 3500, 3600 territory before we see some gains to be made again. You know,
saying, and that December time was around. It was here, wasn't it?
yeah.
Which yeah, so it does look like we'll test those levels again. We've tested them. Last time we did test them was in October.
Mm-hmm.
And that this pattern just looks like a very narrowing band to me.
Mm.
Like considering where we are from a macro perspective, does that really look like we've pulled back enough? Like here we start QE in the US. Proper
yeah.
QE.
Yeah.
We came up here. This was, I guess, March 2020. This is where we literally said 0% or even negative interest rates. We had a much higher gradient on that. So all of this printing, there's nowhere near what we've reduced the money supply enough for a bull market to carry on.
Yep.
Which is interesting.
And how can the US even survive another crisis like this, like another COVID, right? Or, you know, how? It's just going to, like, you know, just inflate the dollar. Just it will happen eventually. I just don't think it's happening. You know, it's in the process of happening now. I just don't think it's right now, like most of FinTwit thinks, you know.
Well, look, we're 25% down from all-time highs, which is nowhere near enough. Like this looks like we're at I guess a resistance level from March 2020.
Yes.
Yeah, so that's gonna, and I guess the interesting one for me is BTC at the moment, because this is outperforming every other asset, and even more so with this lack of, I guess, security in the banking system right now. But
we've seen it. I mean, even I don't know if you're going to move on to it, but you know, another one, Mr. Hindsight Nick here mentioning Ripple to Aaron last week. You know, that I was assuming that would pull. I mean, I didn't put my money where my mouth was, but you know, it seems as everyone's forgotten about Ripple, and then you know, you have one little piece of news about the SEC hearing, how it might go favorably for Ripple, and then boom, you know, 25% push up. And let's not forget, you know, Ripple was kind of one of the like OG proof of stakes that was there, you know. And I think, you know, the fact it still maintains sort of, you know, $15-20 billion market cap, and price hasn't moved a huge amount within the last year, just kind of shows the I think the loyal holders that there are out there.
Oh yeah, like they're an army, like, and they're probably one of the strongest crypto cults out there. Has Michael gone? I think Michael has gone. He would have loved this. He would have given us
I was going to say, if you're frightened of Ripple holders, like, and you know, like soldiers of the Ripple army, I don't mean to scare you more, but there's one in this call right now. He's gone, you know.
He would love an opportunity to give us the update. Shame. But like this, I'm putting these trend lines on here because this is a chart that I keep seeing, like these lines and this pattern that emerges in BTC, and it's all based on similar timelines between it, like a 1 year bear cycle, and then we enter back into a bull market. So is everyone basing it, this is the thing, is the market reacting based off this kind of TA? Is it to the banking crisis? Or is this just because despite anything, BTC is programmed and will react the same way no matter what?
Yeah, no, I don't believe that thesis. I mean, let's say 2020 didn't happen, COVID was non-existent. Let's be honest, Bitcoin wouldn't have the same movement, right? I know it's speculative talk, but it's just true. I believe that to be true. It's correlated hugely 2020, 2021 with the tech sector, right, in the US, and other speculative assets. It's just, where is it going to go from here? And I think Bitcoin's kind of last sort of hope is that essentially, which is almost like quite a negative one, is that the US goes crashing down and goes up in flames. I mean, that was kind of the whole sort of
narrative.
Initial ideology of the initial Bitcoin white paper, was that it's a sort of a safe haven from the centralized economy and the centralized world, which there has been a lot of talk about, and that's why I think me and you were debating it a couple of weeks ago, Aaron, when the price was at sort of 20K, especially with Doge as well. And it seems so crystal clear now that during the sort of USDC sell-off and the circle issues in Silicon Valley, which seems like a bit of time ago now, that there was a certain buy at those levels, due to the amount of money that had been pouring into Bitcoin, because of the potential demise of the banking system in the US.
Yeah, like I agree. But there are certain things that I guess patterns, and we can only really understand it once it completely plays out. Like I think Bitcoin is very dependent on halving cycles, and I think it's dependent on monetary policy. I believe that that's been led by US monetary policy to date, but I believe I'm starting to just think about all of these sort of lines you hear of, like the next bull run will start in the East, and you've got Japan, you've got China all in QE right now. And like China's offering debt at 3%, and the US offers debt, like with all of their tightening, you're getting debt out of the European, the Western world at like 9-10%. Which is also another reason why China's got a huge advantage over the developing and emerging markets, because they have access to cheaper capital. But looking at this monthly chart on BTC, like 28K has been a huge resistance, and it's a monthly resistance as well. So is the end of the month on Tuesday, Wednesday? What's it? 4 days from now, 5 days, 31 days in March. So Thursday. So if I would say if we're under 28K for the monthly closure, we should see more downside again.
It's really dependent on dollar strength, right, Aaron? As well. We use absolute clear correlation between Bitcoin increasing and dollar weakening. It's kind of always been that way within the last sort of 2 years or so.
And then that's exactly what the charts are saying on the Dixie as well. Like if we just flip over back to that, let me just sort of this. Like, let me go on daily. We've seen that pullback from the resistance here, and if we're moving within this sort of triangle, like 104 looks to be the target on the Dixie next. So I'm expecting BTC to pull back this week. And stay below 28K for the monthly closure. There again, I could be wrong, because I didn't see this whole bull about to roll up short term.
Well, yeah, I was at 25K. I was prior to this SVB collapse, I wasn't certain by any means, but I was pretty sure that was a great price level to get in for a short, for sort of like a midterm short, down to maybe riding out to 18K, 16, 17, did touch 19, but yeah, SVB comes into the fold and boom, strategy out the window, right? So you always have to have a plan in place to deal with that. Your own sort of stress testing mechanism, I suppose you could say.
Well, BTC's next halving it's effectively a year from now. I think it's around March 20th next year. I saw some numbers that the fair value of BTC by miners would be 40K. So if all of those points come in and they sync up, then it would trigger a bull run.
But that again is, that depends, that opens up another realm of conversation, which is like the increase within Bitcoin infrastructure and what's paid out to the miners and the higher quantity of transactions on the Bitcoin network. It might not just be dependent on the halving cycle having to mean that the price of Bitcoin has to increase to make it more favorable to the miners, right? If we increase transactions with something that you're advocating a lot for, and I think, and not to put words into your mouth, but is pushing Bitcoin infrastructure, which I think would be good for you to touch upon.
For me, like I think everything starts with money. Like our financial system to date is built on money. So the new financial system that we develop as a people needs to be built on money. So Bitcoin would serve as that kind of test bed, and that's the way I see it. And I think once you really, truly, fully decentralize it to the point where, like Solana's got phones, and I was saying this to you as well, like if you had everyone had the compute power on a phone that they were mining BTC, you had a fully, completely decentralized network controlled by the people. It changes the whole system. And its only limitation is, I guess, there's locked up Satoshis with an unknown individual, and we don't know if that comes live. But even if you were to create an alternative that mirrored Bitcoin and didn't have those flaws and built the infrastructure, I think would be a good fork.
Well, I think that's what is interesting about what's coming at the moment. Like, I know there's a huge debate about Ethereum being super centralized, top level, but with obviously the kind of ZK revolution that I think is going to come in. We saw the L2 revolution, with sort of Arbitrum optimism.
You want to go into what a ZK rollup is?
I can't go into massively, like from a technical perspective. I probably prefer, one of my research guys to go into it. But yeah, essentially, zero knowledge rollup allows to take information out of the typical sort of L1 ETH network to sort of save up block space, for example. So it can confirm certain functions off chain, for example. Which allows for essentially better privacy and better, transaction speed and higher efficiency as well. And I know Polygon's building one, so it's called ZK EVM, and then ZK Sync as well have just launched their mainnet too. So I think there's a few projects that have been listed on there. I think around $17 million of TVL at the moment. And yeah, I think it's a growing
10% in the last week. That's grown as well.
Yeah, I think it's also off the back of Arbitrum as well, with the airdrop story, that there's a lot more people that don't want to miss out, and TVL moving over to it, because I think this is the only way, this is the way the industry is going, is, people want privacy as well, when making transactions, especially in Web3. It's actually pretty transparent at the moment. And I think with typical sort of optimistic roll-ups, you don't get that. Whether with sort of ZKs you do. So yeah, I think, the case for Bitcoin is obviously that it's, the last of the properly decentralized coins out there, apart from sort of Monero, but, big cap coins anyway. That if you can, build a system on the back of, the EVM, so the Ethereum, virtual machine, that allows kind of the same privacy as Bitcoin somewhat. It'd never be the same because it obviously runs on top of Ethereum, which is, arguably centralized. But, at least you can allow that level of privacy that is somewhat similar to Bitcoin, and it allows that scalability too. And you can build on top of it. I think is super, super interesting, especially for a project that I'm building out at the moment with my team, which is, essentially a perpetual, decentralized perpetual protocol. For example, traders that are integrating with that application essentially are giving out their trading strategies, because everything is on chain. Whether, if you have it through sort of a ZK roll up, your trading data isn't, made public to everyone else that wants to see it on Etherscan or Polyscan or whatever, right? I think it can, for example, if you load up IG right now, or any other retail broker, interactive brokers, and I decide to place, a trade on gold, no one else knows about that apart from the broker themselves. It doesn't get sort of transmitted to the rest of the world. And I think that's what a lot of institutional traders as well will want in the space, because they don't want to be advertising their trading strategies to the rest of the crypto world, I suppose.
I know this one's important to you. But I think like Arbitrum has been an interesting one. Obviously, they did their airdrop, and very timely as well, by going into a DAO model and decentralizing completely, and dissolving the foundation as well. So then they're not subject to any sort of securities issues. I think that was very important. But I think one thing that's, I guess, interesting to see from a price point is how strong the governance token is holding from a price point. Like to date, I haven't seen a governance token or a move by a token to move to governance structure do well at all. It's been a massive sell-off from the beginning. And this just shows that there is a lot of faith in the Arbitrum network from my perspective. And like you've spoken about it for months. You've had a lot of faith in it. Have you built on it yet?
No, we were contemplating potentially building on Arbitrum. However, the kind of quants that we have, have a background with Polygon and in building Polygon-based applications. And I think also with, Polygon, like I just said, rolling up their ZK EVM, which I think is the way forward. I think the last sort of 6-7 months has been very, very big on L2s. And I think we're naturally going to roll into ZKs. That I think is just more favorable setup to build an infrastructure that is future proofing itself with that. And I think Arbitrum has become, I wouldn't say cluttered, but there's a lot of projects that have built on it. So yeah, that's the reason why.
Well, Arbitrum kind of did a great job, I think, in taking those ETH projects and allowing more retail users to gain access to them by removing the gas fee issue.
Yes.
But it's interesting, like you say, like ZK's being a leader. I did mention ZK's in the mesh a long time ago. Being the next wave.
We're kind of like up on their testnet sort of 10 months ago or so, a year ago. It's only really
I was
mainnet
talking about them about a year ago, I believe. It was last year, on the back end of last year. And it was when I was really doing a deep dive into what I believe would be the next wave of bull cycle. And essentially it led me to believe that it was going to be derivatives, and which is why we were always talking about, I was talking to you about DYDX and platforms like Hedgix, and the ability to, if you could do decentralized options, would be another great platform. But it was around that time as well where I saw ZK's kind of getting a lot of attention, and even investments. A lot of, I guess, wise money VCs were looking at ZK's as a solution for scalability.
Yeah, absolutely. And I think, yeah, you were pushing that quite a bit. And I think, I wouldn't say the ship sailed for decentralized derivatives, because we saw with Vela, which was launched on Arbitrum recently. I think its launch also was coincided with the success of Arbitrum, and the take-up of Arbitrum, and being probably one of the first kind of decentralized derivative exchanges on Arbitrum too. And they're obviously using oracles as well to allow you to trade pound dollar, euro dollar as well, in a totally decentralized way with up to sort of 100x leverage.
And those are 24-hour markets?
The crypto markets?
No, if you can go against pound dollars or those against stables.
It's not 24/7. Like, they don't have weekend markets. They shut off at the same times as most exchanges will shut them off. So no.
Like DYDX has been performing very well, I would say. If we look at where our bottom was.
Well, they had a massive unlocking, DYDX, from their early stage sort of investors and VCs. So you do tend to see in this market, believe it or not, guys, but crypto can be manipulated sometimes. I don't want to say it, but it's possible. Yeah, and I think you tend to see quite a lot of interesting price action, so we say, on the lead up to lockups. To tokens being released. And that's where I think we saw kind of in early sort of, Feb period, mid-Feb period, we saw that. There was a huge pump in DYDX and a lot of sell-off as well. But, I think these decentralized exchanges sort of maintained their price as well because of the distrust within, well, both the financial system and also, you know, with centralized exchanges, with all the FUD that's been going on recently. I think it's the only natural way that the industry will transition into is these decentralized derivative models that allow you to speculate on a variety of different coins, but also crypto assets such as NFTs. You know, I don't want to go into a plug for the new project I'm building, but it will be an interesting one, which will allow you to trade essentially an NFT index, which is comprised of the top 10 NFTs that there are on the market right now.
More to come later.
Yes.
But yeah, like DYDX, after the FTX kind of thing, all of these decentralized derivative platforms kind of they had a nice little pop. And like it's active, you can see the volume there. It's a nice trading experience. I'm enjoying it.
I remember you were very hot on Solana decentralized derivatives. You're sending me one like every week, a new derivatives protocol. It's just the kind of culture we're building on Solana and Rust it was huge, wasn't it? You know,
I still think it's just being neglected. I still like the team's still strong despite all of the FTX issues. They're still building. Like the platforms that were hit were just Alameda linked issues, which was sad because the Friction, one of the options platforms I sent you, where they used options vaults, where I guess it's like a bot strategy within the vault. So you lock up your money within essentially an option strategy, and it plays it out for you. Like they took a huge hit with Alameda because of the way they were structuring the positions.
I think as well, Solana hasn't been too lucky with some of the derivatives players that it's had. I think they've been open to a lot of exploitation, like Mango Markets and Drift as well. I can think of
Solend as well.
Yeah, their collateral exploitations have kind of ruined that side of things. But I still like Sol as a project. I just think it's been hit pretty hard. But if there's anyone to speculate on it, I don't think there's many people better than you, given that the fact you're in it at a very, very early stage, and we're always pushing for Sol, all from I think, what is it, $1?
I think my average was $1.6.
Incredible.
And I'm at an all-time high of 200.
It's like 250, right?
Yeah, it was about 240, 250. Yeah, that was a big move. I still hold, like I sold a lot around 220, 230 time, first time when I kind of said to people to sell off. Like I still hold a few bags, but like obviously they're not worth anything now compared to the highs. I'm up, so like that's not a concern for me. I still believe in the project as long as the team keeps building as well. I think a good sign is teams that are productive throughout the whole bear market is a good sign to me.
We're still looking at a 20x now, so you know when the token sells off 80% and you're still up 20x, there's not many times that people find themselves in that position.
So, no, exactly. Yeah. Like even like if you look at Rune, I was in at less than $1, took that up to $20. I think I had about 3 waves where I managed to get like a 10x, a 5x, and a 2x out of it. I miss those days. Easy money days.
Yeah, I think it's now like it's transitioned a lot, right? Like I think if you really want alpha, it's finding these new early stage kind of projects that, like, for example, like early stage Arbitrum types projects. And now I can see something similar with ZK Sync, early stage ZK Sync projects, interact with the protocol. Yeah, look for their airdrop, but also, one I'm looking at the moment, which is mute.io, which is essentially like one of the only dexes for ZK Sync at the moment, trading at a diluted market cap of 2 mil. It's got quite a bit of liquidity in it, but again, that network takes off, the EVM takes off, which I assume it will. The corresponding DEX will too, and it really tends to be pretty basic as that. But what was your strategy, Aaron, anyway, initially with Solana and all of the variety of sort of subsidiary projects that it had?
I kind of just played the hype. What do they call it? They refer to it as Sol Season and Solana Summer. But I was like, essentially, I was going off following what Ethereum was doing in the model, because that capital that was leaving Ethereum would move downwards into the coins by a market cap, and that's what I was seeing as those developments. So taking more specific to the financial and DeFi sector, because that's where Solana benefited the most of those faster transactions. And that was the key to everything. There were plays like Step Finance, and that's the one where, I think, was it 1,000
GMT
1,200x? No, sorry, 127x in 9 minutes. IDO. That was just a disgusting IDO.
tiny returns.
Yeah, but I remember trying to click out. But these were all these decentralized platforms that had been built in like 3 weeks, and they were so buggy, and you didn't really like the structure of the way they were doing it, the lottery system and the auction systems. Like, it just made it a big issue. And you just, as soon as you buy it, you're just trying to click out of it as quickly as possible.
Yeah, it's interesting you say that, like how you like the thesis of, Ethereum users and, users of, Ethereum-based dApps kind of moving downwards in the market cap list, I suppose you could say. And I feel like that could be the same with the Arbitrum and Optimism users moving downwards to put liquidity into EVMs or EVM-based dApps, which I think, you look at like a ZK Sync, which has 16 mil in TVL at the moment. There's a real opportunity there from a risk reward perspective. If EVMs are the future, which I haven't done actually huge research on EVMs, but based on just what they offer in terms of privacy, I could see them being, taking off. And investing in some of the underlying dApps and applications and projects that there are there, I think would probably be maybe a smart move, perhaps, as well. From a risk reward perspective, it's another scenario with what you found yourself in, Aaron, with Solana. You're facing a 100% loss potentially, or 90% loss for a 100x gain. With small amounts, it's a fair model or metric to use.
Well, it's risk to reward, isn't it? As long as you're investing within your means, the risk to reward is disproportionately high.
But to say that as well, there's also a lot of garbage out there with new networks, like you say, like a DEX being built in 3 weeks just to list it, just so they can have a liquidity grab, right?
Yeah.
And sell off. It's about the ones you need to actually filter out, the ones that are actually genuinely being used right now. And I think, from what I've seen from Mute Switch or Mute Swap, it's the only real DEX that's being used on ZK at the moment. So that's really the basic kind of hypothesis as to why there might be more take up as more transactions and TVL come into the market.
But this is like, as it stands right now, like crypto is just digital penny stocks. And I don't know when it was, but like I put it on my list to read. It's on my reading list of bookmarks. But it's just look into when penny stocks were regulated and how they are regulated. It was done in 1990. But prior to that, people were doing similar numbers on penny stocks to what we're doing now, because there was no regulation. But looking to the regulation of those, you'll be able to understand how crypto is going to be regulated in the future.
Yes.
And I don't think that future is too far away. Like the way everything seems to be expedited right now. I saw a move by Germany to allow bank transfers or banks to support crypto companies. Whether this is more about, I guess, them accessing liquidity as a solution, opening up new industry in the country, allowing more innovation to come back to the country to allow their GDP to stay up. These are just similar motives I'm seeing everywhere, and even just across like social media, I'm seeing like huge advertisement campaigns from countries in Europe, even in Dubai, like reaching out to talent and people with skills to move there. There's a feed or a YouTube short like every other video. Like I'm seeing it in Dubai, like the countries are running programs essentially paying you to come and live there. which is, and this is something that's, I guess, has happened in smaller towns where they want to increase the population of them, and but to see it happening on a country level was interesting.
Yes.
Major liquidity issues, but someone on talking about liquidity issues out of Europe, a friend of mine's trying to sell 2 large villas, multi-million-dollar villas in Dubai, and they've had several offers come out of Europe from like Germany, I think from Italy, and they the banks wouldn't let the spend come to Dubai, so they physically couldn't transfer that money out of Europe to Dubai.
Wow.
So there are bottlenecks already happening with the banking system. So I guess to go back to Liam's question from like right at the beginning, cool, yeah, take your money out of the bank. Like I've told my parents, take your money out of the bank. Like if you've got 30 billion, I think it was, like, don't quote me on this, I think it was $30 billion pulled out of banks in the US last week alone.
Yeah, I mean, it's probably a reasonable figure based on like just look at the inflows into gold, right? I mean,
exactly. But
you know,
gold
where
broke 2K. Where are we at now with gold?
I think we're 1970, 1980 around those prices. I'd like to hear your take on silver, actually, Aaron, as well. I know you're
I'm big on silver.
Yeah, I'd like to hear that because I think when you actually like weigh up the correlation between gold and silver, silver has got quite a deviation, I suppose. And is it being, you know, underrated? And where could we see in the next year, 2 years? And it'd be good to see your thoughts on that as a silver advocate.
I think there's a gold silver divergence chart, and that's kind of, pull up the chart, try and find it over here.
We need to invest in a Bloomberg terminal for mesh to allow for easy chart pulling and correlations.
Definitely makes so.
You can just type in on Google right now gold silver price coefficient, and then you can see the correlation coefficient, for example, and then you can see the sort of deviation over time between the two assets.
So gold silver ratio.
So yeah, gold silver correlation coefficient.
This one. This is an index. You see my screen?
Yep.
That's not the right one, is it?
Yeah, I would use this one. It's by Macro Micro. That'd probably just be a good way to represent it. Yeah, there you go.
Yeah, there we go. And this really explains it all. And it's really how much silver has begun to deviate from gold, and it's tracked it for a long time. And that deviation began to occur and has generally always occurred around financial crisis, where gold is looked at due to historical reasons as being the gold standard of currency. But silver always then picks up pace with gold, and that's where a lot of my buying response is based on that divergence, and it's roughly 25% that divergence. And this doesn't take into account the growing demand for silver in the market, and that's really, really key here. Gold and silver are both used in electronics, but due to the price of gold, and I guess due to even the future price of gold, what we expect it to do in this financial crisis, we're going to see a lot more demand for silver, and silver as a per ounce is a fraction of the cost to gold. We can pull up those numbers. Let me just go to TradingView now. Gold, as you said, gold per ounce is just under $2,000.
You buying from IBV still?
Yeah, I'm still buying like hard gold there. Look, at the end of the day, paper gold is bullshit. And all it would take is for a large economy or a few large economies to say, yeah, we're moving to a rare earth mineral reserve system, and the price of gold is just going to blow up. And
say that again, Aaron. Where are you buying from? Sorry.
Just a broker here in Dubai, IBV.
Okay.
But I'm using a few.
IBV.
I'm not plugging them, by the way. So if they're watching this video, I want commission.
But are they actually holding the reserves?
Yeah, so they've got a vault service as well.
Okay, in Dubai.
Yeah, so what we've been doing is essentially on a monthly basis now from the company accounts is just shifting fixed amounts into gold, and they're vaulting it. We just pay a very minimal fee there for vaulting third party.
It's kind of a similar setup to like Royal Mint in London, I would assume.
Oh yeah. And look, they all sell, like they sell Royal Mint bars and coins, as well as from like the local mint here. You can get Swiss bars.
Yeah, the two that I've looked at, IBV Gold obviously, and Leaf.ae, I think, which is like silver only.
Okay.
Stand by, I'll send the
link to the group. But yeah, look, as I was saying, like you're paying $23 just over per ounce for silver versus $2,000 per ounce. And as we move further into kind of this digitalization where our whole system's kind of connected by cable, this is just going to have even more growing demand. And effectively every bit of gold that will be mined out of the ground is going to need to underpin currency. So this is where I see everything going. But silver is a hot take. I've been buying silver for years now. But that's on the company side.
Yeah, I'm gonna hedge inflation with a sports car.
It works.
Hedge it with a Toyota Land Cruiser. That's what you want to hedge it with if you were to buy a car. It's just like stable price for the last like 3 years, Land Cruiser, because they last like 40 years.
Yeah, that and the petrol as well.
Yeah,
my mother's got a 2007 Toyota Fortuna with 600,000 kilometers on it.
600,000 kilometers.
Yeah. And I'll tell you what, how many people leave notes on her car asking to purchase it.
Really?
Someone offered her 40,000 for it. Just literally walked up to her, like, they like them for the off-roading,
Yeah.
What do you mean by they, Liam? Don't read too much into that. They like them for the off-roading.
And on that note.
All right, that was a good call, guys. I need to go.
Yeah. It was a relatively more of a slow pace call than usual, actually. I think it was covering. I think it's only natural we covered quite a bit of what we did last week. We're still in a period of